looks like so far it's respecting, price is respecting this level here. Is this better than the Discord sharing screen? So,
Yes, much better.
Yes.
It
Yeah,
is
it
much
look way
better.
clear.
Yes,
really?
You know?
Yeah,
yes.
it's bigger.
Damn, everybody like, yeah, okay, I can't even. That means I guess it is what it is. So like, let me change it to a line. So whenever I'm looking at my levels, I prefer to use a line graph because a line graph doesn't factor in the lows like the pins. It factors in only the closes, which gives you a very clean, like where is price closing. So if you look at it like this, initially I'll use a line graph to plot the levels to get an idea of where support and resistance levels are. And then I'll switch it to a candlestick. And once I switch it to the candlestick, now I can get more details of the candles and what it's doing. And right here with Mara, right here, what do you see? What is this?
And
I-
a golfing candle.
What?
A bullish engulfing candle.
Okay. Why is it bullish engulfing?
Because the market's about to go up.
Ha.
Because it's taking up 2 candles.
Yep. So you see the low of the green one. The lowest point it made is lower than the lowest point of the previous one. See that? The lowest price. And then the highest price here is higher than the top of the the red candle. So it makes it an engulfing bar. And also an engulfing bar, it's not just, it's not just engulfing just because it's bigger than the previous one, but it also matters where it forms. So it has to form at some sort of support. If you see an engulfing bar in the middle of, price moving, it's not as effective. Let me see if I can see an engulfing somewhere. It has to form at a level of support. So even here, there's an engulfing bar here, right? Right here. Do y'all see this one? This is right here. You see this?
Yeah.
So that's an engulfing bar, right? But it was still a level of support. So this would have been a good signal to take because the engulfing bar formed at support. The market broke up, came back down, and it created an engulfing bar at support. The same way, this is an bearish engulfing bar at resistance. You see this one? This red candle right here? Y'all see it?
Yes.
Okay, that is a bearish engulfing candle. And it's most effective if it forms at resistance, right? Resistance. That is a ceiling. So the market went up, 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 and then it formed a solid, strong red candle that engulfed the previous candle. So typically when the bottom of that candle breaks, the market will come down. But this level here was also a support level. So let me see how it looks. You see like right here, if I move this up here slightly, over here, the reason why is, you see over here, December 29th, 2023, you see price came down to that level, 22.79, and it bounced. Then it broke through, came up, and then it bounced at that level again. So that would have been a solid level to pay attention to what type of candlestick forms there, right? So bullish engulfing, bearish engulfing, even here, this is another bearish engulfing. And you see the bearish engulfing formed, it engulfed 1, 2, 3, 4, 5, 6 candles. And once the bottom of that candle broke, the market went down. And it went up. And then over here, what do you see here? Anybody over here?
Is that another engulf?
Yep. Another bullish engulfing right here. So if I maximize it, you see it?
Yes.
Okay. Because again, the bottom and the top.
Okay, the tail. Okay.
You see that? But
Yeah.
also where it formed matters, because it formed at the market had went up, came down, and I can actually do let me do a replay and see if you're doing the peasant trading view, you don't get access to the replay. You gotta pay, you know. But basically, let me see if I can slow it down. Replay. Here. Let's here. So we're gonna start at the bearish. So this is a bearish engulfing. Let me remove these lines so you can see. And let's play. So you see that? You see it came over here. When price came over here to this level, it started rejecting. So now at this level is where you want to start looking for what would you what would you be looking to do at support? What type of
Buy.
exactly? But you just don't want to buy, right? Just blindly. You just don't want to jump into it and just buy. You need some sort of confirmation, right? Exactly. Confluence, signals that are telling you that it's likely going to go up. So it could be, prices above the moving average. It could be RSI is oversold. It could be a pin bar. It could be a bullish engulfing. It could be, whatever other candlestick formation. But you want to wait for the price to come down to your level, and then once it gets down to your level, you wait to get a price action confirmation. And this is on a daily chart, right? So let's see what happened afterwards. So it looked like it was holding, right? It was holding. So at this point, if I'm watching it, this is the point where I'm gonna get in and start looking, right? So if I say I'm watching to get in, but am I convinced yet? Have I seen any pin bar? Have I seen any bullish engulfing bar? Have I seen any inside bars? Have I seen any fakies? There's a whole bunch of price action signals that I'm waiting to see to make my decision. So I'm not in yet. I'm still looking, right? So now once this jumps here, I can say, okay, it looks like we are going. So now I can decide to get in. So let's say I buy Mara, like, okay, boom. Mara, it looks like we going up, so I'll get into Mara. Let's say Mara, but I will decide at this point, you got to decide which strike, right? What strike price are you going to choose? If you choose a strike price that is here, let's say you choose a 32 strike, but your expiration is, what day was this? This was January 26th. Let's say you choose a 32 strike, but your expiration is February 2nd. You doing too much, right? You're not giving the market enough time to get up there. You're being too aggressive and unrealistic, right? So if you find a good level of support and you find a good price action signal, you still want to give yourself enough time, right? And this is where you factor in is earnings, right? When do they have earnings? If they have earnings, maybe you want your expiration to be before the earning so you don't get disappointed, or you can go way after earnings, right? But the further you go, the more expensive the premium is going to be. The closer you stay, the cheaper it's going to be, but the more unrealistic it is, right? So I'm just giving you like a step by step of how you would analyze the market if you're trying to buy options. Like you have to look at the price action, look at the levels, choose a strike. So if you were to choose a strike here, let's say we at 17 and I choose like an 18 strike and I give myself, a week or 2 weeks, it's more realistic for me to see some profit. So let's play it and see what happened. Let me remove the levels. Is that making sense, by the way?
Yes.
Okay, so let me play. So let's see what happened. So it went up and then, okay, so you see what happened? So right here at this level, go back. Right here at this level. See, when price did this again, this would have given me more confirmation. Why? Can somebody tell me why?
Because the buyer stepped in and the support held.
Good. Anybody else? Anybody else?
Go through the trend line.
Yep.
The RSI is very low. It's about to bounce up.
RSI. It's
Yeah,
not
the buying level. Oh no.
it's not too low, but I mean, from my perspective, is because of this trend line, right? So price came to this level here. It tried to go up. It didn't quite make it. Oh shit, is my battery? It didn't quite make it, right? And then it came down to that trend line. So this is confirmation that the trend line is a solid trend line.
But Block, so if our trading view is not set up like this to have these trend lines, what other, I guess, way would we know that okay, the market's about to go back up besides the trend line?
What do you mean if your trading view is not set up with?
So like the trend line is that blue line, right?
Yeah, that's the trend line that I drew.
Oh, okay.
Yeah, yeah, this one, this one. I
Oh,
just,
okay.
yeah. So it's just me paying attention to, you know, patterns on the chart to see where price is likely gonna pivot based on previous reactions or memory.
Oh, okay.
But
So
yeah,
basically it came back to the price it was before it bounced to go back in the opposite direction. That's what you're saying?
right. And it looks like it's respecting that trend line. So I don't know yet, right? It's like, okay, this is a first, like over here was the first touch. So it touched here, it bounced. So I'm trying to see if it's going to respect the next touch. So it can do something like this. It can do something like this, right? It can even go up here. Like, I don't care. The main thing that I'm looking for is if it comes back down here, it respects this level. Like it doesn't break below this trend line. So long as it come down here and it bounces from this trend line, I know that the trend line is solid. So that's all the trend line is doing for me. And the trend line is serving as a dynamic, like it's a support basically. Because a support level can be this. A support level can be this. It can be this, or it can be slanted. Right?
Okay.
This is basically a slanted trend support. Because support is basically a level where there's demand in the market. So it doesn't have to be a horizontal line. It could be slanted. But so long as price is respecting it, then you can take trades from that level, that zone. So that's why I draw the trend line to see if it's going to respect. So now let's play it and see what happened. So you see it bounced from that level, right?
Mm-hmm.
And then at this point, this could have been a put.
Another engulfing too.
Exactly.
Engulfing bearish to let us know it's going back down.
Exactly. So you could have bought a put.
Yeah.
You see what I'm saying? I don't do puts, but if you are versatile enough to not be biased in your brain, and it doesn't, like, my brain doesn't help me to do puts, but I see it. You see what I'm saying? Like I recognize it. So if you in a buy, and let's say you got greedy and you didn't take profit, after seeing the engulfing, bearish engulfing, even if you're not gonna buy puts, what do you think you should do? If
You should get out.
exactly. So
You about to lose the money that you just made.
exactly. So that could be a signal for you to take profit, even if you don't use it as a signal to buy puts and make money. By taking profits, you still making money. You know what I mean? So you can use it to either get in the market or get out of the market. So let's see how, if we had played the bearish engulfing. So let's say we saw the bearish engulfing. We weren't in a call previously. We saw the bearish engulfing and we like, okay, we're gonna buy puts. So let's see how that will play out. So this would have been the signal, right? This would be the trigger signal. You saw this, you're like, okay, I see a bearish engulfing signal at a swing high. This is a swing high. you don't buy this anywhere in the middle of like price, right? You want to buy it at a swing high, the same way you want to buy a bullish engulfing at a swing low. So this is a swing high because it's a swing high. This is a high. This is a high zone. This is a high zone, and that is where it rejected. So let's play. So let's just assume that you saw this and you're like, I'm gonna buy put, which means you're betting for the market to go down from here. Let's see how it would have played out.
I would have waited for the next candle though before I decided to do a put.
Correct. But this would have been your guide, right? The bearish
Right.
engulfing is your guide. And this is a daily. So let's factor in that information that every candle takes a whole day to form. So when you saw this candle close, you had to wait until this day. The next day close. The next day still didn't close below the low of the previous candle. But you could have said, okay, I'm going to buy a put. But this is where the strikes matter. What strike are you going to buy and what time frame are you giving yourself? Are you going to buy a 10 strike and 10 strike with 2-day expiration, or are you going to buy a 24 or a 26 strike? See, the closer the strike, the better it is for you. So if you were to buy a 25 strike and gave yourself maybe like 3 weeks or whatever, that would be a better contract. So let's see how it played out. So do you see what happened here? At some point, you were shitting your pants, right? Because
It turned around, right?
exactly, it turned around. You're like, block. I'm down 50%. What we doing? Right?
Yeah.
Like, what's up? What we do? I'm cutting, man. I'm down, man. I'm losing money. I'm like, chill, relax, take it easy, right? But if you bought it here, so let's look at the so February 15th, and it went to February 28th. So basically 2 weeks later, you were down. But imagine if you bought a 2-week contract, you lost money. You see what I'm saying? So
Yeah.
depending on your expiration, if you were to have bought a weekly contract, you lost money because you betted that the stock was going down to, let's say, 25. And then it went to 34. You are clearly down by maybe 80%. But somebody who bought the same put and they bought a 25 put, and they gave themselves enough time. Once the market started coming down here, down to 18, 19, 18, 17, they making money. The only difference between them and you is they gave themselves enough time for the market to swing up and down. You cut it too close, so you lost. And there's a visual representation of what happens. But sometimes we only looking at the profits, the P&L, so we don't see from a price action perspective why it's so important to give your contracts enough time. Is this helping, making sense?
Yeah. This also makes me realize that I'm not a swing trader because I don't want to wait. Like once I see, me losing money, I don't want to wait to see if it's going to turn around. I just rather like get it out. I think I prefer like day trading.
Okay, so if you're a day trader, right, let's take these same levels and then you want to come down to like, let's go here. So we're gonna
Because
go,
you're right. I see what you're saying. Like, when you buy the contract further out, even if it goes down, you have time for the market to kind of retrace and you
right,
can go back to break even and start to make profits. But it's just sitting through that.
right. And but it also depends on your entries, right? And which time frame you're using. Because that's a daily time frame, it's gonna you're gonna wait a while. But if you are using entering on a 15-minute, right? On a 15-minute, if this was your entry on a 15-minute, you really don't have to wait as long as you do on a daily or a weekly. So if you find yourself to be a day trader and you want like quick returns or whatever, you need to get the direction on the higher time frame and then come down on the lower time frame, right? Come down on the lower time frame and say, okay, I'm trying to get into Mara. What here tells me that Mara is about to go up? Like what price action signal or candlestick formation is telling me that the market is oversold? Let me get in. Because imagine if you were to get into Mara on a 15-minute chart and you got in somewhere here. From here to here, what's the date? So let's look at the date. February 7th to like right here. February 7th to February 9th, right? You started making money right away. This was boom, 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 boom. But at what point would you have taken profit? Because it's still going boom, boom, boom. It's going up. This is all money. So if you are a day trader or a short-term trader, your profit taking got to be on point. Because otherwise, if you enter on a 15-minute chart and you stay in too long, you can watch your profits go up only to watch it come back down because you didn't manage the trade properly. There's no reason why you should get in here with an entry like this and not secure profits with all of this. You got in here at 17. Maybe your expiration was a little tighter, 2 weeks or so. Do you think you would have secured profits in this?
Oh yeah, I would have got in and out probably 3 times in that time frame.
Okay, so that's what you prefer. And this goes for everybody. You have to figure out who you are as a trader, right? You don't have to necessarily do what I'm doing or even what $1 Million Strategy was doing, because he has his own style. I have my own style, and it's based on personality. So you can take that information and then look at yourself, your temperament, your patience, your personality, and decide what you are as a trader. You don't have to do what I'm doing, because I do what I do based on who I am in real life. So if you try to mimic what I do in my trading and you a whole different person in real life, there's going to be a conflict and you're not going to understand why. It's not going to be comfortable for you. So I like that you said that. You got to know yourself. Who you are in real life is going to reflect in who you are when you're trading. There's no question about that. So if you like day trading or you want quicker returns, then your execution has to be on point. That way you can get in when it's, when price is like right around support, RSI is oversold. You understand price action signals, and you get in and you let it cook, so on the 45-minute, the higher you go, the less noise you're gonna get. You know, the lower you go, because somebody like a day trader or a scalper could have gotten in here, right? A scalper could have gotten in here. You could have gotten into Mara at 1485. You could have bought a weekly expiration, 1485. Boom, 17. You made a lot of money because this moved really quick, right? What day was this? January 19th, January 22nd. 3 days, the market went from 14 and change to 17. We talking a lot of money, right? A lot of percentages, but it could have also gone the opposite direction, you know, so. Does that help? Besides Shannon, anybody else getting it?
I'm locked in.
You locked in?
Yeah, it
Everybody
definitely
else?
helps.
Okay. So there's a 2 hour. Let's look at 1 hour, how it looks. And you want to kind of look at all the time frames, right? So even on the 1 hour, if you zoom, you see the same bullish engulfing, right? So there's a bullish engulfing followed by another bullish engulfing. Y'all see that?
Yep, I see it.
You see it? Bullish engulfing. This didn't play out, but it went and then it created another one and it's still at support. So that's all that matters. It's still at support. So whether you're trading, you're using the daily or weekly or 1 hour, 45 minutes, whatever, you can still use the knowledge to your advantage. You just have to understand how to interpret the candlestick. The story is telling you. It's always telling you a story. So on a daily, this is how it looks on the daily, on Mara. So look at the Mara daily. The Mara daily is a bullish engulfing. Mara 4 hour. It's a bullish engulfing that broke up. Are we getting it? This is a top-down approach, right? You want to look from the highest time frame, top-down approach, and see if it's telling you the same story. So daily is bullish engulfing. It's at support. It doesn't mean that it can't break lower. I want you to understand it can break lower. Anything, Mark Douglas, by the way, who on here has listened to Trading in the Zone? If you haven't, you should. I don't know why you wouldn't have at this point in your trading journey, because it's a game changer. Who has listened to Trading in the Zone?
I'm currently listening to it.
What do you think?
I like it so far. I've only gotten to a couple of chapters, but so far I'm liking it, and it's helped me to understand my mindset and the type of things that I need to work on. So it's helping me. It's helping.
Got you. Anybody else? It's a must read. Like even after you read it the first time, you have to read it again and again and again. And you're gonna notice that every time you read it, the way you absorb it is gonna be different. Because when you read it as a newbie, it's like, oh, okay, this makes sense. But when you read it again while you are trading and experiencing the emotions and the ups and downs, now you're going to understand it on a different level. And then when you come back and you read it maybe 6 months later or a year later, you're going to be like, damn, I got it, but I thought I got it, but now I get it. You know, so don't just read it one time and put it away. Read it, trade, you know, try to like incorporate the lessons, and then go back months later or whatever and listen again or read it again. And it's going to change trust me, it's gonna change your life because trading is more psychological than anything.
What about the trading Bible as well?
Who wrote that? I've never heard of that. Actually, you know what's funny? I'm writing a book. I'm writing a couple of courses. I got the crypto. I can show you, but whatever. I got a crypto Bible. I think that's what I named it. Crypto Bible and something Bible. So it's funny when you said it, I'm like, wait a second, there's something out there like that? Because I thought I came up with it. God damn. I guess.
Yes, I think how you pronounce the first name is Munhisa Homa.
Okay. Yeah, I've never heard of it. But yeah, traded in the zone, like for me personally, I don't like to read, but I've read a lot of trading books. The best one in my opinion, like no question, is Trading in the Zone, Mark Douglas. And it's all psychological, so it's like mindset, trading psychology, how to think while you're in the market. And sometimes people don't put emphasis on that because everybody wants to learn what we are talking about here, the technicals. But if your mindset is not strong, if it's not deeply rooted in the fundamentals of how you're supposed to think, no amount of technical information is going to help you. And that's just the truth. Doesn't matter. You can know all the candlestick formations, the patterns, you know, the terminologies and the RSIs and the Fibonacci retracements and blah, 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 everything. You're still not going to be consistently profitable unless you get your mindset together. So, yeah, so on the daily, Mara is forming a bullish engulfing. 4 hour, it was a bullish engulfing, it broke up. 3 hours, bullish engulfing, broke up, now it's chilling, it's forming an inside bar. So this formation itself is a potential signal. It's an inside bar, right? An inside bar is the opposite of a bullish engulfing, if you will. Does that make sense? It's like when the bigger candle is on the other side. You get it? Capiche?
Yeah.
You see that? It's still a bullish
What was
engulfing,
the name?
an inside bar, but you can call it whatever. It's still a bullish engulfing, just that the engulfing candle is on the other side.
So what does it mean in regards to the direction that the market will go?
Okay, so the way you trade it is inside bar, right? It also matters where it forms, but like an inside bar, if it's practically the same thing. It's still a bullish engulfing candle, but basically the top of this candle serves as resistance. The bottom of it serves as support. So if the top of the first bar, which is the mother candle, so this is the mother candle, this is the inside bar. Just like this, the baby, there's the mother. The top is the head. When the head breaks, it's a continuation signal, right? So you already have a bias. You're trying to go up. You feel like you close to the support level, but now it's at a resistance, right? There's resistance here, this zone. There's resistance. There was resistance here and it broke. There was resistance here, it couldn't break. So the inside bar, the mother candle is serving, the top of it is serving as resistance. So once it breaks, right? Once it breaks, you don't enter. You want it to break, come back down here to retest, like not an exact level, it's a zone. It breaks, let it come down to retest. If that holds, then you look at what type of candlestick formation forms there, and then you get in and you run it up. That's how you play it. So you don't get in here, you don't get in here. You let it break and feel like, oh shit, it broke and I missed out, right? But let it come down here. Once it comes down, you join and you run it up. That's how you play it.
Okay, so if it's a mother bar, so basically what you're saying, when we notice a mother bar and then an inside bar, we wait for the third candle to see if it retests, and based on the retest, when it hits support, depending on the direction we go, that will let us know our next move.
Right. But it doesn't have to
Okay.
necessarily be a third candle. It can take 5 candles or 10 candles. You know what I mean?
You mean for the retest?
Or even the breakout, because the breakout, the first bar can break out, boom, right? This could be one long candle, breaks. And then there might be another candle that even goes higher from here to here, right? Then there might be a smaller candle that retraces slightly, right? And then that's like 3 candles. Then there'll be another candle that do this. That's like 4 candles. And there'll be another candle. 5 candles. So it may take 6 candles or so, right? By the end of the day, the most important place we're trying to look is this level right here. So all these candles really don't matter to us, except the candles that are gonna form now that we are back to the zone, because this is the zone
Okay.
where we want to get back in on the way up.
Okay, that makes sense. So this is for a mother bar inside bar formation.
Right.
Okay, that makes sense.
But inside bar too, it can keep on forming, and you can play it and play it and play it. Let me see if I can give you an example. You can play it on the way up, like it breaks, you buy, then you sell, then it breaks. Because okay, let me just show you, it'll be easier. And there's a lot of inside bars.
Because I was a little confused. I was thinking that based on the example you were just doing, I was thinking that, okay, I will have to wait for inside bar to come back to that retest before I can jump in. But you're saying that you can jump in on any inside bar. You just have to know specifically what to look for.
Yeah, you can play it so many times, right? So let's start from here. And this is $10,000 worth of game right here. Like an inside bar, it's a continuation pattern, right? You can play like right here. These are inside bars. Do y'all see like here? These are all side bars, right?
So just to confirm, we're looking at this all looking at the same thing. The mother bar is that first green bar to the left, 2 bars over.
No,
right?
This one is the red bar. So the red
okay,
one,
so you're starting with the red bar as the mother bar.
right? And then this is an inside bar. So this is an inside bar. This is an inside bar, right? So the mother,
Okay.
consider the first candle the mother, the red one, right? That's the
Okay.
mother. This is a baby. This is a baby. you can play inside bars immediately. There are different strategies to get in, but you can play it on a break. So when the mother candle breaks, boom, I'm in, right? There are different ways to play it. You can get in and your stop loss, like if you trade in Forex or crypto or whatever, you can get in right away. Your stop loss is, you got in at 998, your stop loss is at 909, which means if the market retraces down and closes below 908 or whatever, you got it wrong. You would have made money here, depending on how you manage the trade, right? Because you got in here and it went all the way to 13. So this is one way to play it. The top of the mother breaks, you get in, boom. This is an aggressive way of trading this type of signal. Or you could have played the break and the retest. This would have been the break and the retest. This is break and retest.
Yeah, okay.
You see what I'm saying? So there are different ways to, this is more safer, right? Let it break, let it retest, and get back in. Or you can play it aggressively, break, get in, put your stop loss and watch it go. Or break, retest, watch what happens here. And even the break and the retest itself also formed an inside bar.
So
You-
just to confirm, I understand what you're saying when you say break. So the candle doesn't have to necessarily close above the mother bar as long as the candle or the wick goes above the mother
Nah,
bar.
ideally, you want it to break and close.
Okay, gotcha. Okay.
So that is the safe, because sometimes there's something called a fakie, right? Where it would break and it will fake you out and close below. So if you jump in aggressively thinking that it's gonna close, you're gonna miss out because it broke. From your perspective, it's like, oh, we going up, and then it'll be like psych. Then it will, you know what I'm saying? It will go back down and turn around. And that's a fakie. So if you don't want to get faked out, the best way is for you to wait for a break and close, retest, and then go back up. That is the safer way. But you can also play the aggressive way where once it breaks, you're like, oh shit, it's breaking. You taking on a risk. But
Right.
even right here, the break and the retest is also an inside bar.
Mm-hmm.
Look at this one, inside, and then it broke. So you can play inside bars so many times, like break, buy, boom, boom, boom. There's an inside bar here. This is an inside bar right here. Here. You see what I'm saying? Right here.
Yes, I see it.
When I'm doing the Secklin thing, y'all can see it?
Yeah, we can see it.
Oh, okay. So same thing. Break. You could have gotten in 14, let it run to 16, or wait for it to come down here, get back in, ride it up, right? Different inside bars. There's so many inside bars, inside bars, inside bars, inside bars, right? And if you master it, you can, this is a bullish engulfing right here. Market goes up, pulls back down, right? This is a pullback, pulls back down, inside, bullish
Bullish engulfing.
room, right? So it all depends on how, like you can make, if you a scalper, remember there are people who get in the market for 5 minutes, for 2 minutes, and they be like, boom, or for like an hour or so. And this is a 3-hour candlestick. 3-hour time frame. But you can go down here, right? I don't recommend it, but I'm just showing you for uh educational purposes, right? I don't recommend it, but there's inside bars all over the place. Actually, let me go to 3 minutes. 3 minutes. There's so many inside bars, right? So if you were a day trader and you were the shit and you like action, right? Man, you know how many times, but see, the thing is, if your account is not, if you don't have enough money, you're not gonna enjoy this, right? But you can play like inside bars and bullish engulfings like so many times, so fast, and make so much money. But at the same time, it's very, very risky. Right? It's very risky. It's best to play it on a higher time frame, right? Pin bars, inside bars, like if you understand chart formations, like right here, boom, this is a pin bar. Somebody may have gotten into Mara just on this pin bar. Boom, I get in a pin bar. I see a pin bar here at 24. I get in. They may be playing a weekly contract or whatever, right? Because they entering on a smaller time frame. So on
What does the pin bar mean again? I'm sorry. I
a
just want
pin
to make
bar
sure.
is a rejection candle. So
Okay, okay.
basically the market is like when the market is going down, 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 you see a pin bar, it's signaling you that the market is about to change directions, right? It's coming down here, it's like creeping down, like it's coming. Market.
So the pin bar is the one where it's a little bit of candle with the wick on either side. Would that be the pin bar?
Yeah, this the one that stands out. See, a good pin bar will stand out from the crowd. This one.
So that red one and that green one is the pin bar. That red one right there, and then
Just
the
this one.
next. Okay, okay.
Just the it's almost like a hammer, right? And what makes it a pin bar is that the body, the leg of the candle should be at least 2/3 of the body. So
Okay.
this is a pin bar. This is a pin bar, right? This is a pin bar.
So what if the wick is on the other side? Would it still be a pin bar? Even if it has the
Like this.
well on like that first one you were on, you see how it had wick on both sides? That
This one.
one.
This one.
No, not that one.
This
That
one.
one. You said that was a good example of a pin bar, but I see it has wick on both sides.
Yeah, but the wick, so long as the top wick is not, it's not too long, pause, right? So the the top wick, like you can have a wick, like a pin bar shouldn't. Okay, so this is a pin bar. So okay, this is a better example of a pin bar.
Okay. And that looks like the hammer. Okay,
That looks
gotcha.
like a hammer, but this is also a pin bar, right? That's like like a pin bar that's flipped.
Upside down hammer.
Upside, right. And but this is also a pin bar.
Okay.
Even though it has a wick, it's still a pin bar. But this pin bar, it's not a good pin bar to trade because of where it formed. This pin bar is not a good pin bar to trade because of where it formed, right? So just because you see a pin bar doesn't mean you should just buy or sell anywhere. A pin bar is effective based on where it forms. But there's so much game, right? I feel like this is a course that I'm going over so fast, but there's a way to play them where if a pin bar, for me, if a pin bar fails, if it's a good pin bar and it fails, it's going down. So like if I saw a good pin bar here and I bought and it didn't go up and it came down, that's the time where I buy puts. That will be the time you see me buying puts. Because if a solid pin bar that meets the criteria of what my edges and my strategy is fails, most of the time I would go the opposite direction. Not because of emotions, not because I'm trying to chase the price, but it's because if a good pin bar fails, it means the market is going further down. Let me see if I can give you an example of a good pin bar failing. Now, once you understand that, you can play it in so many. I'll find one. It's not hard to find. Like a failed pin bar that is supposed to make you money. If it doesn't, but see the 3 minute, that's the thing about 3 minute, it's so noisy, right? That's why I don't like trading. It's not as consistent. So like here, this is a good example of, you see, a pin bar needs to stand out. So market is consolidating, and it makes a move. Remember, this bar here, at some point within its 3 minute life, was a solid green candle. And it was going up, 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 and it rejected. This is a good entry to get in, right? So you will get in at the close of this. You will buy and put here. Your stop loss will be like right here. This will be your stop loss. And then money, money, money. At this point, you got to decide where to get out, because you can stay in and let it go, 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 go. But I was trying to show y'all. Anyway, this by the way, I was trying to do what you call it. I started with Mara. I couldn't even. It's too much game. But I hope you learned something with this. Like here, okay, here's another one. You see this? There's a pin bar. It has to stand out. Like every pin bar is not weighted the same. They may look the same, but it has to form at a certain point in the market, right? For it to be effective. It has to stand out. So this one over here, it stands out, right? It stands out. Long wick. Small body. It's green. It formed at the bottom of, the market coming down. So this could have been an entry for you to get in. Your stop loss is down here somewhere. And then you get in 26.42. Boom, 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 27. You can get out anywhere here. The market went up, more, but you never know what's going to happen before it happens. But let's look at any question before I move on. God damn, I was going to be on here for 1 hour. I mean, I spent like 30 minutes trying to sign on. So
Do that same strategy work if you're doing like say like live trading with like a Bitcoin or something? How would you use that same strategy for moving chart?
what do you mean moving chart? Let's look
Like
up.
you showing us Mara, it's not really moving right now, but like Bitcoin is moving.
Yeah, okay, let's look at Bitcoin.
Oh, and I put that trading candlestick Bible in the chat as well.
Oh, okay.
Well, in the Zoom chat.
Bad,
Yeah, that's
bad.
the Japanese guy that created the candlesticks, right?
Yeah. Oh, and if you give me the ability to post links, I could drop links to free versions of these books that you be referring.
Bet. Okay. So this here, Bitcoin, I missed this, but I would have gotten in on these two tweezer bottoms, right? Like right here, these two pin bars. Whenever you see two pin bars with like the same, they kind of made the same lows, right? You put a line here. There's a three. I mean, I wouldn't use a 3 minute. I don't use 3 minutes, but I'm just using it as an example. There's a double pin bar or a double tweezer bottom or whatever they call it. There's so many different names, but market is coming down. It rejects another candle, rejects. This will be an entry. Bitcoin, you buy 67,954. Boom. And this is what we're going to be doing on Sway Market. So this brings me to Sway Market. This is what we're going to be doing. But the market moves so fast that just because you get in here, 67,945, you can target 67,600 or, 68. But our stop loss is somewhere down here. If the market doesn't go up or we don't secure enough profits and it turns around, it will come and kick us out and we would lose. So yes, all the candlestick formations that I'm telling you, you can utilize it. This is a pin bar. This is Bitcoin. There's a pin bar. There's a bearish pin bar that you could have sold, shorted the market here at 68.4, took profit at 67.9, or if you were aggressive, 67.4, right? You would have made money from here to here. This is like buying puts. You'll be selling if you're using Sway Markets or whatever. Right? Same thing. So you were asking about Bitcoin. There's a pin bar. Here's a pin bar right here. You see it?
Yeah.
Same thing. This is the market went up. Boom, 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 boom. This is a 3-minute. So like I said, I don't recommend this. I wouldn't do this. But because it's the most active, I'm just using it for, illustrative purposes. But it's chop, up, down, pin bar. I could have gotten in 68, get out somewhere 68.5 or 68, whatever. Because if you don't take profit, the shit would have came out and kicked you out. Let's say, and this happens to me all the time. I make the money, but if you don't learn to take profits or to move your stop, to trail your stop, because you can trail your stop, right? You buy your stop losses here. Once the market move up, you move your stop to like right here. So if the market turns around, it's going to kick you out right here, but you still made money from here to here. So it kicks you out in profit, right? But if you get in here and you let it run up and you don't take any profits, it will go up only to come kick you out and go further down. But you made money on the way up. You just didn't manage it right. You know what I'm saying? Is that making sense?
Yeah.
So you can use it anywhere on any time frame, pretty much on any instrument, right? But the higher the time frame, the better. Inside bar, pin bars, whatever you call it, whatever. I think that the sway market, I think, should be postponed. What y'all think?
Yeah, I agree.
Yeah, because I think we spend too much time and it's getting late. because I wasn't sure how to set this one up, but now that I know, I think, if we do it another day, it doesn't have